For a long time, I thought daily bias was the key to clean entries until I discovered something that completely changed how I trade. Welcome to FXPilot, where smart traders learn to trade with precision, discipline, and market structure. If you are new to this channel, kindly subscribe, share, and hit notification for more videos. In today's video, I will show you the liquidity sweep strategy that made me stop relying heavily on daily bias and how it helps spot cleaner entries with less confusion. To be honest, daily bias can sometimes feel confusing, bullish here, bearish there. Then price does the opposite. The only way to escape such confusion is through understanding of how liquidity sweep quietly reveals intention. The market doesn't move without grabbing major liquidity. Instead of predicting direction, start reacting to liquidity. This liquidity sweep strategy is super easy and simple. When I mean super easy and simple, this strategy uses just two time frames. Just two time frames, as you can see. Okay, it uses the M15 for liquidity sweep, break of structure, and fair value gap. Then the M3, the 3 minutes is for entry with fair value gap. Okay, so what happened is this. On the M15, this is the steps. On the M15 time frame, you look for liquidity sweep. Once you see a liquidity sweep, then you wait for break of structure. Remember, when price breaks structure, it leaves fair value gap behind. Okay, that fair value gap that it leaves behind, you allow price to come into it, allow price to pull back to that fair value gap. Then you go to the 3 minutes time frame and look for a strong displacement above or below the last opposing candle at the M15 fair value gap. Guys, I will go to the chart and explain all of this to you. Okay. Then at N3 will be at the 3 minutes time frame, fair value gap of the 3 minute time frame. Target 1 to 2. That is just the strategy. Super easy and simple. This is it. Now, price sweeps liquidity, breaks structure, okay, and leaves a fair value gap, as you can see, and leaves a fair value gap. Then you allow price to return into that fair value gap. Allow price to return into that fair value gap. Then you go to the 3 minutes time frame. On the 3 minutes time frame, this is price now. Let's say price arriving into the fair value gap. The last down candle, this last down candle, okay, you need to wait for a bullish displacement, a bullish candle to close above it. Once it closes above it and leaves a fair value gap, this fair value gap on the 3 minutes is your entry. Very easy and simple. Or it can be like this. It can take two candles to displace above the last down candle into that 15 minutes fair value gap. Once that displacement that you see, maybe two candles or three, causes a fair value gap, this is your entry. That's just what this strategy is all about. Okay. Go to the 15 minute, look for sweep and a break and a fair value gap. Allow price to return into that 15 minutes fair value gap. Then go to the 3 minutes time frame and look for an engulfing or a strong displacement, okay, in the opposite side. Okay. So we'll go to the live charts. We'll do a walkthrough examples. Okay. Very easy and super simple. This will be the best strategy we'll ever use. Very easy and super simple, guys. Stay tuned. Let's go to the live chart. Okay, guys, here we are on the Euro USD chart, 15 minutes time frame. Okay, now we will look at two examples under this Euro USD. Okay, then we'll look at one example in NAS 100. Then we'll look at one other example in GBP USD. Four examples, at least that should be enough for you to practice and backtest on your own. Okay, all right, so let's look at this. Let's look at this. Look at this sweep on the 15 minutes. Price swept this high, okay, and gave us a break of structure. Give us a break of structure. Let me zoom it out. Gave us a break of structure and left what? A fair value gap behind. So what we'll do is this. Price left a fair value gap here, you mark it. And also left another fair value gap here, you mark it also. Okay, you mark it also. So whichever one price reacts from, that's the one we will. If price wants to react from this last one, you will see a bullish displacement. It will disrespect this man here, and then it will respect this other one. So as soon as price approaches this one, this is the first one. As soon as price approaches this one, we'll go to our M3. If it will not respect this first one, from M3 you will see there will be no setup. So let's go to M3. So guys, this is just a walkthrough example that I'm doing here. Okay, this is just a walkthrough. Now from the 15 minutes, you go to the 3 minutes time frame and allow price to get to your zone that you have marked. This is our fair value gap zone on M15. Now what do you see? We want to see the last up candle. We want to see the last up candle being conquered by a bearish displacement. So this last up candle should be conquered by a bearish displacement. Okay, a bearish candle, either 3 candle or 1, okay, should displace and close below it. Okay, now let's watch. And that's after that displacement, there should be a fair value gap left behind. So guys, let's mark. What's happening to my mouse? Okay, look at this. There's a tiny fair value gap there. I hope you can all see the fair value gap. Very clear. So this is what you do. Your entry will be at this fair value gap. So you place your entry here at that fair value gap and make it clear so that you can see yes, the first line, the first fair value gap line here. That's where your entry will be. Your stop loss should be above this, above the swing high, and then targets 1 to 2. Target 1 to 2. You know that yes, it will go and clear this low, but targets 1 to 2. That's what this strategy is all about. So target 1 to 2. That's it. So where is your target? This man that came and tap us in, and then price hit our target. That is just the strategy. That is just the strategy. Let's look at this. Let's look at the second one. Let's look at the second one. Price doesn't move without liquidity. Guys, this strategy is very simple. Just go to your chart, you will see it. Okay, very simple, and it repeats every day. It repeats every day. Now let's look at this. Let's just consider this man. Price swept this. Okay, break structure or a change in state of delivery. Okay, now look at this, guys. As of when price broke that structure, as of when price broke this structure, this man hasn't come. Okay, so as of when price broke this structure here, there was a fair value gap here. So now what you do is when you see this break of structure, this strong displacement, look at this. It took three candles to take out a high, or two candles to return down. That's momentum shift. Watch my first video on breaker block. You understand momentum shift. Now, as soon as this man does this, you go to the 3 minutes to wait for this to occur. So let's go to the 3 minutes. Let's go to the 3 minutes. So at the 3 minutes, we want to see a dominance from sellers and a fair value gap. Now this last bullish candle, this is the last bullish candle. We want to see sellers displace below it. As you can see, it took two candles to displace below it. And then, was there a fair value gap? Yes, there was a fair value gap. That fair value gap is your entry. Simple. This fair value gap is your entry. Place your stop loss here. So we'll take our entry, target 1 to 2. Guys, try this on PropFM account and thank me later. That's your entry. 1 to 2. Target 1 to 2. That is it. That is how you trade this strategy. That is it. Very easy and simple. No daily bias required. You don't need any daily. Listen, liquidity sweep is a direction on its own. That is smart money footprint. Once price sweeps liquidity, it has given you sense of direction, especially when it is a major liquidity like sweeping of Asian high, London high, and then this is occurring at in New York. Okay, you already know that major liquidity has been taken. They have given you direction. What direction are you looking for again? Or price sweep previous day high or previous day low. They have given you a sense of direction. Price doesn't move without sweeping liquidity. That is why this strategy cannot fail. I am not saying it is 100%, but at least you will get 80 or 85 or 90% from it. Let's look at another example. This time around, let's go to NAS 100. Let's look at NAS 100. Okay, so this is a bullish example. Okay, so I've marked this down. Price swept this low. Okay, price swept this low. Even from here, we can see disrespect of opposing fair value gap. Under change in state of delivery, you can see what's going on here. You can see what's going on here. But there was no fair value gap here. But they respected that inversion fair value gap. So from here, you can also go to the 3 minutes to enter here. But this is not our strategy for today. So let me leave that out. So let's look at what we have for today. Price swept this low and then did what? Gave us a break of structure and then left a what? A fair value gap behind. Left a fair value gap behind. So that fair value gap, as soon as price is approaching it, we'll go to the 3 minutes time frame. So let's go to the 3 minutes, guys. This is easy and simple. It happens every day. Okay, happens every day. Now let's look at it. This is NAS 100. So what are we looking for? We're looking for a strong displacement above the last down candle. Now, what did you see? What did you see? This is the last down candle. This was the last down candle, but price did not displace above it. Then price came down. This was the last down candle. Price this. Look at this. Price displaced above it and left a fair value gap. Let me show you. So price displaced above this guy here and left a fair value gap. That fair value gap is your entry, guys. No matter what happens, that fair value gap, your stop loss below this man here. Or if you want to be more conservative, you wait for something like this and enter and place your stop loss here. It's still okay. But based on this strategy, this fair value gap is our entry. Target 1 to 2. Target 1 to 2. And you see this low is a protected low because it swept liquidity and then gave us a break of structure or a change in state of delivery. Okay, change in state of delivery. So this low is a protected low, and then there's a fair value gap. Okay, that's our entry. This is our stop loss. Target 1 to 2. 1 to 2, not 1 to 22. Okay, 1 to 2. That's it. That is it. That's your target there, guys. Very easy, super easy and simple. Super easy and simple. Backtest this strategy, guys. Go to your chart and backtest it. 15 minutes time frame, 3 minutes, 15 minutes for your structure, break of structure and fair value gap, and then 3 minutes for entry. Now let's look at the last example. Let's look at the last example. That will be GBP USD. Okay, so on the 15 minutes, this is GBP USD. Okay, so that's the example there. I marked it so that I will not miss it out. Now, price swept this low and then gave us what? A break of structure. And after that break of structure, was there any fair value gap? Yes, that was a fair value gap. Gave us a fair value gap. Look at it. Now, by the time price came down like this, you are waiting for this to happen. Now, you see this. This is a threat from smart money. This is news. A lot of people, once they see this, they will be scared of taking this trade. They will be scared. Okay. All you need to do, you go to the 3 minutes time frame. After the news, just go to the 3 minutes time frame. 3 minutes, you know what you're looking for. Wait for the last up candle. Now, there is something now, guys. If you look at this, based on our previous videos, I used to talk about changing state of delivery. I hope you can see. I hope you can see. So this is the last up candle. So what you want is, you want price to do this, to cause a strong displacement. Look at it, took 1, 2, 3, 4, 5 candles to take out liquidity, but just one to bring it down. That is a sign. And when you're entering, you don't need to be scared. And then it dominated this last up candle. So and left a fair value gap behind. That fair value gap is our entry. Okay. Naturally, once you enter here, you target this low. But based on this strategy, our target is 1 to 2. Guys, have a rule-based system and follow your rules. 1 to 2. Follow your rules. 1 to 2. As you can see, it cleared this low too. This is 1 to 2. This is super easy and simple. 15 minutes for break of structure and fair value gap. Allow price to return to that fair value gap. and then you go to the 3 minutes and wait for a strong displacement below or above the last up candle or last down candle. Then you take your entry. This is super easy and simple. I have not seen any strategy that is super easy and simple as this one. So guys, please go to your chart, do a back test, okay? Try this and let me know in the comment section. Try this, back test it, okay? Back test this, back test it. It's very easy and simple. No stress, no daily bias, okay? No too much analysis. All you need is just a sweep. And on the 15 minutes, once you have a sweep, the man that breaks structure should be very strong. Take note, you should have a strong displacement to the downside. And then look at momentum shift as well from 15 minutes. Look at momentum shift. I've taught momentum shift in my first video against on a breaker block. So look at momentum shift. Those are the footprints. Those are the smart money footprints that you need to see on the chart. Okay. So guys, the biggest mistake a trader will make is to predict too much. When you do too much prediction, okay, you don't need to be doing too much prediction. Sometimes price simply tells you where it wants to go after taking liquidity because the fair value gap is there. That is the intention. Keep it simple. Keep it simple with setups that appear frequently and repeatably. Okay, don't do too much analysis. Stop stressing yourself, stop over trading, stop over analyzing. Trading is supposed to be fun. You just do this and go and relax with your family, have fun, have enough time for yourself. So guys, we will stop here for today, okay? If this video was helpful, kindly do the normal thing. Like it, subscribe. Subscribe. Let's grow this channel together, okay? Subscribe. In the next video, I will show you the five most powerful ICT entry models that works perfectly. 5 most powerful ICT entry models that you can use. It's not that you use the whole 5, just take one. I will show you the 5 best entry model that you can ever think of. That will be in the next video. So guys, don't miss the next video, okay? Don't miss the next video. See you in the next video, okay? Bye.